Hello and welcome to the Trading Bell Show. I'm Noki Kimboy, and today we are doing an assessment because wise people do that. You look at how you've done life. Right now we are on the actually 7th month of the year, so we've done the first 6. How have we performed? Right here on the Trading Bell Show, of course, domiciled at the Nairobi Securities Exchange. We have to take a look at how the Nairobi Securities Exchange has performed over the past 6 months. What are the trends? What will shape the next 6 months before we close the year 2022? And who better to speak about this particular issue other than the CEO of the NIFC, Geoffrey Odundo. But before we do that, let's take a look at his profile, shall we?
Geoffrey Odundo is the Chief Executive of the Nairobi Securities Exchange PLC. Mr. Odundo, an accomplished investment banker, has been in the financial services sector for the last 26 years, 20 of which have been in the capital markets in various senior roles in asset management, corporate finance and securities trading. He is currently a director of the Central Depository and Settlement Corporation Limited, director of the NSE Clear Limited, and a trustee of the NSE Fidelity Funds. He is a member of the Central Bank and Consolidative Forum for Domestic Debt Market and a council member of the Institute of Certified Investment Financial Analysts. Mr. Odundo is also a director of the Association of the Stock Exchanges of Africa and is a member of the Thomson Reuters Africa Customer Advisory Network. He holds a master's degree in strategic management and an undergraduate degree in mathematics and economics. He is also an advanced management program graduate from Strathmore Business School.
Welcome to this show, sir.
Thank you.
Quite an interesting half year. Just looking back even before we entered 2022, first of all, 2020, a global pandemic, reshaping and resetting everything. And now everyone is talking about recovery for these coming years. And we start 2022. As we came into the year, what was the premise? On what foundation was the NSE entering the year at?
So thank you, Noah. And I think you've really given up a good starting point for what did we forecast in 2021 and 2022. As you rightly put it, 2020 was really a surprising year for us because on the back of 2019, we had all projected that 2020 would be a good year. But with the coming of the pandemic, I think it threw all our plans off the table, and hence we had to now sort of re-engineer our business and also look at other ways that we could sustain the business. So in 2020, we were able to take the market totally virtual. We were able to also to help our listed companies go virtual on their corporate action programs like AGMs. And that's sort of been the trend that we've also been experiencing since then. 2021 was supposed to be a very strong year for us, projection-wise. We did get some sense of recovery, and we saw some good performance across all markets. And so we expected that this trend would just go on in 2022. We definitely factored in the elections coming to impact on the market towards the media to the end of Q3, but we didn't foresee the Russian-Ukraine war. And that created a major impact on the market. The NSE today has about 55% international capital allocation coming here in terms of active trading from those frontier market investors. And so with the surprise war, as I may say it, a lot of investors withheld their positions and did not put in new money during the first half of the year. Secondly, that money that would have potentially found its way here was sort of diverted or reallocated to the developed markets because, again, interest rates were rising in the US, Europe, and most of Europe. So the reallocation of that capital impacted on emerging and frontier markets, and Kenya is a member of the frontier market. NSE is a member of the frontier market index. So in the first half of this year, we've experienced a low level of activity on our equity bond market. That has largely been as a result of the international investors holding out And then locally, our local institutional investors have been putting more money in fixed income instruments, primarily treasury bonds, because again, the yields in the treasury bonds have been so high, and providing them with a better opportunity. Then, so when that happens, then there's no strong demand side. There's also a sort of what do you call more supply coming through. Then the market prices definitely trend down.
Okay.
So that's why you're seeing right now the activities, the prices are down almost 20. The market index is down 20%. The turnovers that we saw in the equity and bond markets are also down between 18 and 20%. So it's really an attribution of these key factors that happened more at the macro scale.
Okay.
That's impacting on the local market.
Definitely. And looking at the specific counters, quite interesting, of course, the blue chips, lots of red as we approach, half of the year 2022. But I realized that an interesting trend, looking at the agricultural stocks, the kakusis, looking at sasini, yeah, quite a capturia tea, yeah, they've been actually making gains as we move into the year. At the same time, you mentioned the issue of agriculture, food security, what Russia, Ukraine is doing to the agricultural system. So looking at the way the stocks are performing vis-a-vis what is actually happening on the actual agricultural ground, why the contrast?
So the agriculture sector, especially companies in that sector who are engaged in export production, produce, stand to gain from a weakening shilling. Okay? Because what a weakening shilling does, it makes you access you're able to access, since your receipts are in dollars, when you do a translation, you're getting more shillings for dollars. Are we together?
Yes.
So in an environment where currencies are weakening, it favors exporters. All right? It makes it more expensive for importers because you have to give in more shillings to access the dollars or any other currency, say the euro or the pound. So that translation gain that is one factor that would help companies who are engaged in export production produce.
Yes.
And so sashimi, kakuzi are doing a lot of that. Tea, coffee, avocado, and so that's a good opportunity. Specifically, if you look at a crop like avocado, there's a huge demand right now of avocado globally, and hence the production. These companies stand to benefit from that. The price of coffee has appreciated globally, so definitely this is providing a great opportunity for these companies to enjoy the benefit of that. And in times of uncertainty, one of the most important thing that you must make sure is food. Food is one of the most important areas of interest, food security.
Yes.
And so these companies will tend to perform well during using as a base of those factors. Again, what we've seen is that the companies have deployed very efficient ways of production. Tea harvesting is now almost fully automated. There's better land use. There's better yields coming out because of very good farm inputs, especially fertilizers and also seeds. And just engaging with these companies, there's a lot that they've done to help improve the yield. So that trends to support that.
Okay.
Other sectors are performing well, but not as fast as equally as such. But primarily because of the interruptions we're seeing. For instance, if you're in manufacturing, you have a lot of inputs that you need to import. Again, the supply chains interruptions, the currency issues, especially when you're doing imports, then that affects some of the companies in the manufacturing sector. So you can see that is kind of different factors affecting different sectors based on really the macros.
Definitely, and you've mentioned the issue of currency. Of course, we've been seeing the dollar gain ground globally against all currencies. So to put it, this is not uniform. because I observed the pound, it's not the same trend, which is quite interesting to note. Maybe help us understand. We saw even, some of the manufacturers saying we have a local dollar shortage. Initially, that was the sentiment, which again the CBK dismissed, saying no, do not create panic. The dollars is there. You just have to find it. But talking about that currency devaluation or one gaining over the other, why is it not uniform across the other major currencies?
So, what's going on right now at a global level? The yields in the U.S. Treasuries are rising. So inflation is rising in the U.S. I think we're now looking at it heading almost to 9%. And to tame inflation, the government has to deploy certain measures to bring inflation within their target rate or target range. And so what they did recently was to adjust the Federal Reserve rates. And for the first time in a long time, they actually adjusted them by a very big margin of 0.75%. Now that's a big increase when it comes to a market like the US. So what happens then is that investors who would then look at the US market as an attractive opportunity, because if you are currently earning say 3% on a US bond, and all of a sudden the rates are just to 3.75%, that's a very big yield. And factor in the fact that this is a relatively risk-free market, what they consider a more risk-free environment, they will definitely reallocate their funds from other markets to the US. So in essence, for you to invest in the US Treasury, you need to use the US dollar. So you'll sort of convert most of your cash into US dollar to acquire assets in the US. And this creates a huge dollar demand at a global level.
Yes.
All right? And that's why the dollar then strengthened as a result of that. There are other factors. Dollar is considered a safe hedge in terms of turmoil. So people would rather hold dollars than even the local currency. And we're seeing that kind of thing happening even across various countries. So that creates that imbalance.
Okay.
The other thing is, in a situation like the UK, for instance, how much, the question here would be, how much trade are we doing with the UK directly that will enhance demand for the pound?
Okay.
I think a lot of our exports or a lot of our receipts are in dollars as opposed to the UK pound. And probably that's why you're seeing some limited level of the variation in terms of the performance for both the sterling pound and the US dollar.
Right.
So it's where are you mostly exposed to, and also what's happening in the US has been a big factor.
Quite interesting comparing that to what has been happening for the first half year of 2022 in the African market. Of course, we've seen the decline in majority of them, of course, with valid reasons. But there's always an anomaly, and that is Nigeria. And there are quite a number of explanations that give to that. There is more reinvesting within the market itself. What are they doing different, and what is the implication of what they're doing different? Is it something that can be applied here and work for us, or the current structure that we have, it's even better since you can easily come in and move out?
I think from a incentive structure perspective, the Kenyan market provides one of the best markets for investors to participate, especially foreign investors. The incentive structure we have in Kenya is very attractive. Number one, when it comes to the macro level, we have a very well diversified economy, a very good capacity, a very good infrastructure capability than most markets in Africa. Secondly, in the capital markets, our incentive structure for foreign investment is very good. For instance, if you're a foreign investor, we don't have a restriction on what percent of a company you can own. You can actually own up to 100% of a company, except those that are considered strategic. And for that, you need an approval from the Capital Markets Authority to increase your exposure in that particular counter. Secondly, we don't have capital gains tax in our market. Most markets in Africa have that. We don't have currency controls. So today, if I sell, I can actually be able to repatriate my money. There are no currency controls. So we have a very good incentive structure for the capital markets,
Yes.
and even from an economic perspective. Now, the Nigerian case is really, without going too much into it, but our reading of it is, one, the Nigerian incentive structure is not comparable to ours. They have currency restrictions, for instance. They have a level of capital gains tax in their market. So I think what could be helping them at the moment is that a lot of the monies that could actually find its way out is being reinvested because of certain controls. And that's possibly one of the key reasons that's helping there. Albeit the fact that possibly that the economy is a bit more stable now, and ideally they don't have any key events like elections going through, so it's more of a stable environment for the time being, and that could be helping them trend up.
Okay.
And I think for us, so our reading of it is that it's probably a one-time opportunity. A lot of us have taken sort of the normal trend that has happened based on the global macros and also some of the local challenges that we continue to face.
Okay. Just recently, the unveil of the Nairobi International Finance Center, which is a critical milestone when it comes to achieving, Vision 2030. At the same time, one of the promises and the incentive, proposition that NIFC is giving is promising to deepen our markets. How is it going to do so?
First of all, to say that we are very happy with that particular launch. The Nairobi International Financial Center is one of the key infrastructure platforms that will provide avenue for investors to access Kenya using that window. Now, a lot of international investors would like to make Kenya their headquarters. And so the absence of a very ideal structure then makes other jurisdictions like Mauritius and other markets, even in Dubai, more attractive because the incentive structures in those jurisdictions are very important. So what does the NIFC provide? NIFC provides an ability for a company to come and set up their offices here, access incentives that'll help them stabilize faster, work permits, and many other opportunities in line with international standards. So that's how the structure has been set up. For us as the NSC, what does that do? When we have these big companies coming to put their locations or make these their locations, then they have the ability to look at the markets locally as well, from being resident in the local market. So these companies will then think, okay, I'm growing very well in Africa, and I'm headquartered in Kenya. Why don't I think I should maybe list part of my shares, my Africa headquarters, my Africa holdings, into a market like Kenya, because this is where I am. Even in terms of the interactions that we will have with them, it'll be a lot easier. And that's why for us, partnering with the NIFC is a very, very good opportunity for us to build this market at a global scale. Secondly, we're able to then also have unique opportunities. For instance, carbon trading. Carbon trading, anybody wishing to set up a carbon trading company through the NIFC has got a tax incentive provided to them. Now, NSC has got a very big strategy around climate action. And to do that, we have developed an asset class or asset classes for investors to access capital markets finances to target climate-related opportunities. The first one we did was the Econ Green Bond in 2018. We are talking to a number of other potential issuers to issue green bonds. The government is also discussing ability to issue a green bond and possibly to list it here. So that climate action strategy is really driven towards providing avenues for institutions to exploit those opportunities using local currency financing. So the air carbon NSC, NIFC engagement is very, very important for us because that memorandum provides us the opportunity to build an understanding around these markets. What kind of regulations do they have to operate within? What kind of platforms are these being traded on? who are the buyers of these products, how are they registered. So there's a very big opportunity to learn and engage.
Okay.
Potentially it could consummate into us establishing a company in Kenya. We as the NSC are going to be leading the intervention towards establishing a carbon exchange in Kenya. So we think we'll be engaging with many partners around this.
Wow.
So the opportunity is immense. We're happy with that development, and we look forward to how we can develop a carbon exchange.
Definitely. And as we finish up, of course, just less than a month to the election, and with all these trends, of course, now is a dip. Everyone is being told buy. Now you can afford it. Buy as much as you can because we are bouncing back. So are we expecting this bounce back to be experiencing this Q3 moving into the last quarter of the year? And what is the sentiment of the exchange around the general election as we clear up?
Thank you. So we've been in this cycle for a number of times, and we really have seen the trends that happen. Pre-election markets sort of trend downwards. Post-elections, there's some level of recovery. And so our assessment about the outcome or the performance of the market is that the trends won't change much. So we believe there'll be some good level of recovery after the elections and after settlements of any other issues post-elections happen. And so that's why we keep saying there's a case to buy. Secondly, elections notwithstanding, the market is so undervalued from a fundamental perspective. Companies in Kenya are now trading below 10x or multiples of 10. What do I mean by that? When a company's earnings, all right, compared to the cost of investments, is your payback period is less than 10, that means you're a very undervalued stock.
Yes.
Normal environment stocks are between 12 and 15. So your ability to get a price appreciation is much higher at the moment. Secondly, the yields or the dividends that you get from these current stocks at these prices are in the region of around 10 to 15%. I think I've seen the highest at 17%. Even better than the fixed interest instruments. So fundamentally, companies are doing well. They're performing well. The fundamentals are strong. Yes. The returns are good. And so elections notwithstanding, this is a real buyer's position. Anybody with a time horizon of 3 to 6 months is looking at a good upside. On top of that, we have a derivatives market, which if you're not sure about markets going up, just buy a contract, a 3-month expiry contract, load it. If you buy a Safaricom contract, load it with a Safaricom contract. That takes a long position or trends up. If it's a short, for the time being, that's what you possibly want to do. And should the market recover, your contract will benefit you.
Yes.
So what I try to say is that we think this market is attractive. Fundamentally, companies are doing well. It's a good buying opportunity, and your ability to make money is higher.
Okay.
And it stands a great chance. So our view about the election is that we are pricing in an outcome that will keep the market stable.
Okay.
We've seen a lot of focus on the economy, which is very exciting for us from all the leading candidates. We hope to engage with the next administration to tap into the capital markets, to raise financing to finance government programs. And I believe a lot of investors will be keen to continue investing heavily in this market. Kenya is an attractive country, and we actually see this country and the markets appreciate in the future.
Wow, that's beautiful. I love the positive outlook. Young people say that the vibes are positive. Yeah. You are young at heart, Mr. Geoffrey, but thank you very much for your insight, Geoffrey, Odundo, CEO of Nairobi Securities Exchange, just giving us the analysis of the first half of 2022 and also the projections. And he's saying now is the buyer's time. It's time to invest now. Sooner you'll be gaining from the markets. Well, with that said, we want to take a look at the markets, shall we?